Eric Muathe, Muathe.com. Just wanted to take a look at how we can be following stocks that are moving and figure out where we can at least gauge whether the movement higher is going to be taking place. Over the last couple of weeks, in fact over the last 1 or 2 weeks, we've seen some of the oil and gas stocks really take off, and they are pretty much gaining anywhere from, let's say, 50% in about a month to even I've seen as high as 300%. Now keep in mind, all of these stocks that I'm going to be discussing here have been down substantially from the highs of 2014, and that's why they are moving. Relatively speaking, it's not a big move, but in terms of recent percentage gain, they are really on fire. So some of them have been up substantially. Now the question is, should we follow them? Now what I want to show here is, first and foremost, if you take a look at the ETF that tracks the sector, the oil services ETF, OIH, you can see it shows how this has been major bear market for this sector. Over the last month or so, 2 months, we've seen a major move on some of the individual small cap stocks that have been recently, over the last 2 years, been absolutely decimated, destroyed to no end, and recently bouncing. Big bounce in terms of percentage gain. But you can see here that one of the reasons why we have not been playing that sector, again, we have not, is because obviously the RSI is not close to 3-year highs. In fact, it's going to take a couple of years before this becomes a buy as a sector, because they are not moving to 3-year highs. And just as a point of reference, if you go back, let's say, let's go 13 years here, as a point of reference, you can see the last time there was any substantial move, in fact, during this sector hasn't been on a major run. Let's go back 20 years. Just want to show you that the only time instruments and sectors have a major, substantial, sustained move to the upside is when they stage the ultimate Muathe breakout. Here, 3 years moving to 3-year highs on the RSI in 2004, blasted to 3-year highs there. At the same time, in fact, let's show those together so we can have a good reference point. So we are talking about this period, this breakout right there. In fact, this breakout here in about 04, that breakout in price, or you can even draw it this way, connecting the RSI highs there, and also you can see that that corresponds nicely. So the only reason I'm discussing this is just want to show you why we have not been playing the recent move in the oil and gas sector, because we are very selective in our entry. We only want to find instruments that are breaking out to 3-year highs, like they did here in beginning of 04, late 03, and again here, right? And that began a substantial move, and so that began this explosive move here. Now in the current market, clearly we are not seeing any explosive move to 3-year highs on the RSI or on the MACDs. In fact, this tells you that this sector is not going to be in play for the next couple of 2 to 3 years, because for it to be a red hot momentum buy, it needs to be trading at 3-year highs on the MACDs, at least one of the MACDs, or we need the RSI to be at 3-year highs. And as you can see, it's gonna be a while, many years, maybe another 1 year, 2 years before it eventually gives us any type of breakout. So that's why we've avoided the sector. Having said that, the stocks have really moved, and just want to show you some examples here, and keep in mind they are off the highs. You can see BAS is up 57% even with a pullback this week. For the month, you can see another one here, 19%, 77% on BTU, even though it's pulling back so far, but 77%. But again, keep in mind, 77% gain, even though it's really trading in the lower single digits between $2 and $4. The stock was trading at $300 in 2013. So really it's seen a major drop. So this is, in relative terms, And clearly, even here, we can see clearly why we are not playing this sector is because the instrument or the stock is not trading to 3-year highs, so it cannot be on our watch list. Keep in mind that the RSI also remains below 30.9. So this is a group of stocks that I picked from the top gaining stocks over the last couple of days. And here another one up 76% for the month, even though it's pulling back. Another one here again 37% CLF. And all these stocks here, it's a stock, small cap stock that is trading, had gained as much as 200%, pulling back now. And keep in mind, this is relatively speaking, they are moving, but in terms of real movement, the highs were in 2013, 2014. Here the highs were in the 70s, higher 70s, and now coming off the lows here under 20, it's gained substantially, a little bit. Here's another one. And anyway, what you get here, here's one that was up almost 300% in the last month. So why the video? The video here is to show you that what we need to do if you want to play this sector. It's very simple. Because they are now pulling back, what we can do is go to the daily charts of all of these instruments. So let's go back here and I show you what we can do. If you want to play the sector, it's very simple. Let's go and change all these charts, which I was showing 3-year monthly chart. Let's go and change this to, and I'm using stock charts here, of course. Let's go change all of this to daily charts, and I'll show you what you can do. It's a very simple trick, is to figure out the recent daily closing highs once they break out, and I'm going to show you 6 months daily. So let's go take a look here. So on all of these stocks, all you have to do is pretty much come here. Oh, let's go back here. Figure out the daily closing high recently, which is yesterday on this one. Remember, the stock is down 24% for the day. No surprise, because we were expecting a pullback based on some of the things we are looking at, and I can share that with you. The reason why coming into this week I was expecting a pullback is very simply because we had come back to test the recent break. The recent break here on the oil services ETF of the highs of 2015. You draw a line on this weekly chart. We were suspecting that it was coming back to test the RSI 50 level on the weekly, and that it was gonna stall. So very simply put, this is why I was expecting a pullback, and we are getting a pullback this week. So what we can do even on this oil services sector is to be careful not to miss any short-term spike. Again, you can set an alert here for last week's closing high, and that would be whatever the closing high was. So it's down 88 cents, so you add that up, will be 27. Hope my math is right. 27.82. So that would be last week's closing high, or last week's closing, and you can use that closing for the next buy point. If you want to really play this sector short term for any spike at all, maybe if the stocks move again 20%, 30%, whatever, is what you can do is simply set an alert, and if the oil services sector breaks out above last week's weekly closing high, or weekly closing, simply put, if it breaks out above the weekly closing of 27.28, then you can take a look at some of these stocks. Alternatively, for the individual stocks, all you have to do is figure out where they closed this past couple of days and set an alert. So here the alert would be at about 3.6, somewhere in that range, which is this recent closing high. And of course, if it breaks out again above that level, then you can use that as a trigger point to go back into the stock. So that's how I would trade this, is just take a look at all these stocks, consider where they closed recently, set an alert here. It would be at $3. This way you'll not miss any move in the sector. If they break out again, you're gonna be part of the move. If they don't break out again, you're not gonna be bothered by a steep drop. Take a look at the drop here. Again, all of these stocks, we were expecting a pullback this week, and right now for the day down 30%, and it really just is a reflection of how the sector has been out of favor, and just had a short spike. In fact, and if you use the technical, it's very easy to identify the turn points. Well, I don't want to say easy, but you can see here recent break in December on this 6 months daily chart brought the stock off the highs there, and we can draw a line. In fact, what I can do is, let's look at this properly. You can see that off the highs here, if you use our RSI uniformity method, there was a break here. That break has become a problem. Uniform activity, V-type uniform activity rejection at this level, which also coincidentally happens to be around a declining 50-day moving average. So really, if you want to play this stock again, what you have to do is pretty simple. Just set an alert at $3, which around $3, which was the recent daily closing high. If it ever breaks out above that $3 area, then you can consider that a short-term buy for a spike. Okay, just like if somebody set an alert here at this daily closing high, and once it broke out there, you would have gone long and for a good gain, you know, probably about from 1.8 all the way to the highs here, about 90% gain in 2 days. So just set an alert on all of these instruments, and here they are. I'm just gonna click through them so you can see all of this. You can set alerts, because if they spike again, this is where you want to go along. And keep in mind, if you use the uniformity method, which is probably one of my best methods in timing turnaround situations, you can see here recently we broke through here for the highs there. You draw a line from there. The next time the stock comes to that level and shows uniform activity rejection, you know that it's time to get out of that name. And very clearly, as it closed yesterday, it had come back to this level here, which had been a problem in December for the highs there, and again a problem in the early part of March. So here, if you want to play this stock, the best thing to do is, if you don't want to miss the next spike in the sector, is clearly set an alert for the stock should it break out above the recent daily closing high there of about $2.40, somewhere in that range. That would be the buy point. And you can go through all of these names. Again, they've had a substantial move from the lows here of $1.20 to the highs here at about $3.08. That's almost 3 times your money. And again, the principle here is to set an alert now that it is pulled back, and if it breaks out above the recent daily closing high of about $3.40, you'd be waiting for the breakout. You only want to buy it once it breaks out. This is how you time some of these spiky names. For example, if anybody was lucky enough to have bought this ideal breakout, on hindsight, anybody who bought this breakout when it moved back above the previous recent daily closing high here, this entry point, you would have seen a good gain, because the stock jumped from about $2.10 all the way to the highs here. Again, another 80%, 90% gain in a couple of days. So all of these names you can adjust and use the recent daily closing high here for an entry. It's a simple way to make sure you don't miss out on the next potential swing trade when a sector seems to be spiky. So all of these names, I'm just going to go through them just for the sake of anybody who's going to be looking at the video down the road. You can see here the buy point is going to be, if it ever breaks out above that 6.8 level, which is the recent daily closing high in that range. Here you can see that this is uniform activity above 69.1. So uniform activity rejection, I'm just trying to type here, uniform activity rejection at 69.1. This uniformity rejection tends to be a sell signal sign, and that's what we are getting. But then again, all of these stocks, just you need to set a fresh alert at the recent daily closing high and see what happens. It's a very simple strategy to make sure you don't miss any future spike. So here $11 would be your next buy point. See what happens. And otherwise you don't own them, because they just came out of nowhere, staged a huge spike. NE needs to break out here. And in fact, I want to show you something here. There's also another way you can do this, and it's a slight adjustment. Slight adjustment, and is to actually use the weekly closing high here. You can use the weekly closing high on all of these stocks. Now that they've pulled back, you can use 13 the recent weekly closing high for a breakout. So you can either use the recent daily closing high, or you can use the recent weekly closing high now that they're pulling back. Keep in mind that coming into this week, over the weekend, I discussed that all these stocks were coming back to sell signal areas, and that they were potentially pulling back. And you can see now they are all turning red on the week, which is exactly where I was saying that they need to be short candidates, because the weekly charts were already showing signs of stalling. So either use the recent daily closing high, or use the weekly closing high from last week. You can even see here this stock has been struggling to hold above the red line over the last couple of months, and again coming back here. The key is uniform action. This is what uniform action or symmetry rejection. Why markets choose to use uniform action, what I call uniformity, or symmetry at standpoints, I have no idea, but that just seems how the market seems to trade. Again here, take a look at PBR. Nice gain off the lows here of 2.8, the highs here of 5.2. Nice reversal. Anybody who was lucky enough to have played the recent breakout above this recent daily closing high, and again on hindsight, that's how we can always learn, is going back and studying where a movement began. And here it began with this breakout. The stock spiked from 360 all the way to 540. A good gain there in a couple of days. Okay, or you can go back and say, you know what, I would rather use the weekly chart. So you can use the weekly chart now that the stock is red for the week. Use the last week's closing on a weekly basis, the weekly closing from last week, as your next buy point should the stock ever break out on a weekly chart. The reason being that you can see that can be a good idea, because you can see here there was a breakout attempt. That breakout attempt at about $10 did not work out. For 3 weeks it tried to hold above 10 and finally gave up the ghost, I guess is how you say it. So it broke back below the breakout level, and again, it's just to be clear, it staged a weekly closing high there, settled down for 1-2 weeks, which was the minimum, attempted to break out above that range and failed. So since then, you can see after this failed breakout to hold above $10, it eventually went all the way to under $3. So right now the stock is not a buy because it's not breaking out to three-year monthly highs. But what you can do again here, you can clearly see that, as we discussed, all of these stocks were coming back to test trouble spots on their weekly chart. This 2-year weekly shows a break here of those highs, double top resistance off the highs there with a failed breakout, tagged the red line again here, and coming back many months later and tagging that with uniform action. Again, keep in mind, we are talking about uniformity rejection as a signal that the stock is about to turn around. So here, clearly uniform action rejection on the red line. So the next time you want to buy this, if you really want to play short term, is to wait for it to break out above the recent weekly closing high from last week. So all of these stocks have the same look and feel. Either use the daily closing high, or use the most recent weekly closing high as your entry point. And so I'm just going to go through them for the sake of showing you what the stocks were that have had a nice move for the last couple of weeks. Here they are, and I believe we are coming close to the end. So we've come back all the way around. So either use the recent weekly closing high, or use the recent daily closing high, set an alert if they ever break out above those levels. That's where you go back, and this is how you time instruments that are spiking. You wait for them to settle down either on the daily chart or on the weekly chart. Use the recent weekly closing or the recent daily closing as your next trigger point for a buy opportunity. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESCS.